Hi folks, this is Mangesh Sope here. I'm the founder of Peaceful Loan, and our mission is to ensure that the students who are seeking an education loan for study abroad make an informed choice about the most cost effective education loan. And we are here so that you could do your research very easily by watching bunch of videos uploaded on our channel just to help you understand all nitty-gritties of education loan. There are a bunch of common terms which you must have seen on WhatsApp groups, on your Google searches, on Instagram Reels, or many other forums, right? These terms could be daunting, and that's why I'm going to take out time and explain each one of these to you right now. First is the rate of interest. All of us are wanting to minimize the rate of interest for your education loan. Fixed interest is the interest rate which will never change during the entire duration of your education loan, whereas floating interest rates are pegged to a certain standard interest rate. For India, these are either pegged to repo rate and in turn the bank base rate, which is either called as MCLR or something equivalent to that. That means if the repo rate goes up, the interest rate on your loan is likely to go up. If the repo rate goes down, the interest rate on your loan is likely to go down. Most of the education loans available in India would be of floating interest rate nature, and which is actually very, very good for you because we are currently in a very high interest rate environment and interest rates are likely to go down from here on. Second term which is used is the repayment tenure. It is the time allowed to you to pay back this loan. It could range between 8 years to 15 years depending on which lender you're going for. Third is the moratorium period. Moratorium period is the payment holiday given to students as they are incapable of returning or repaying this education loan during the tenure of their education, plus some grace period for them to find an appropriate job. Generally, moratorium period ranges from 6 months to 12 months post graduation, and then your EMI starts. During the entire moratorium period, you don't have to pay EMI, but that doesn't mean that during moratorium period, banks are not charging interest on your loan. Many a times that interest is getting added in your principal amount, and EMI will start on principal plus the interest accrued so far. Coming to the next term, which is secured loan versus unsecured loan. Secured loans are essentially loans with collateral, where you pledge something to the bank and banks have the right to liquidate that asset and recover their principal amount in case you are unable to pay this loan. Security could be liquid assets like FD, cash, government bonds, and many other things, or it could be illiquid assets like home, non-agricultural plot, commercial property, so on and so forth. Whereas unsecured loans, which are without collateral loans, are offered without any sort of pledging of assets with the bank. And hence you will always find that unsecured loans are slightly more expensive than secured loans, as banks are taking higher risk by giving you a large sum of money without having any collateral with them. Next is processing fees. Most banks put in a lot of effort in terms of documentation, credit approval, doing verification of all your documents, your residential place, your parents' CIBIL score, so on and so forth. For all this effort, banks expect a processing fee from student side to do the sanction process. Practically, processing fee is only paid for most of the financial institutions only after they have verbally communicated that your loan is sanctioned. Only exception to this rule is government banks, which expect you to pay processing fee in advance. But the processing fee for government banks is very small amount, and it's about 7,000 to 10,000 rupees, which is not a sizable sum. And hence, processing fee is not that big a problem when it comes to education loan. Next is the loan insurance. As we have touched base upon secured and unsecured loans, over and above this security layer, banks want you to take a loan insurance in case of any mishap with you, or in case of any accident which will make you incapable of working and repaying this loan. Banks can claim the principal amount from this insurance. It essentially secures banks' principal amount, and the loan is safe from a bank's perspective. Next is the co-borrower, co-applicant, guarantor. All these are synonyms, right? Banks are looking at somebody who is your relative or somebody who can stand as a guarantor for you in case you become incapable of paying the EMI for this education loan. Banks also derive the strength in terms of how much loan can they give you from co-borrower's financial. That's a safety net from bank's perspective. Next is sanction versus disbursed amount. More often than not, students are looking at getting sanction amount equal to I-20 or sanction amount good enough to show cost of education for their visa interviews. But in education loan, say your sanction amount is 75 lakh rupees, nobody can force you to take the entire 75 lakh rupees of disbursement. The interest and the EMIs are only applicable on the disbursed amount and not on the sanction amount. Sanction amount only defines the processing fee and the loan insurance amount. Disbursed amount defines the actual EMI and the interest charged on the loan. And hence it's important to distinguish between sanction amount and disbursed amount. When getting a loan sanction, go for the maximum permissible sanction amount. While disbursing, be frugal. Take only as much as you need. Next is the prepayment or foreclosure charges. I'm sure you must have had enough exposure to home loan, car loan conversations happening in your friend circle or with your parents, or you must have seen a bunch of videos around that. All of these loans attract foreclosure charges. What do you mean by foreclosure charges? Foreclosure charges are essentially, if the loan tenure is 10 years and you want to finish off that loan and close the loan in 5 years, that means you're willing to pay higher amount than EMI, then banks are going to lose out on the interest which you would have paid for 10 years, and hence banks levy a foreclosure charges, sometimes close to 5% of the loan amount as the foreclosure charges. But because it's an education loan, Government of India or RBI has mandated that no banks can levy a foreclosure or prepayment charges for an education loan. That's a good news for most of the students who are going abroad. If they'll end up getting a good job, then they can repay this loan much faster, and that will ensure that you don't have the burden of education loan on your shoulders here on. I'm sure this must have convinced you that you want to use Peaceful Loan service to get your education loan. The immediate next point of action would be, how do I get in touch with you guys, right? It's simple. Either log on to our website, book a free consultation call, or call us or WhatsApp us on the number given on your screen. Email us at mangesh@peacefulloan.com, or connect on the link given in YouTube video description. If you would have found this video enjoyable, you learned something, you have many friends who are going with you on your study abroad journey, please do share this video with your friends and family. It will help your parents also make better decision with your education loan. It might help your other friends make the right decision with your education loan. And don't forget to subscribe to the channel so that every time we put up a new video, you can get an opportunity to see that video first. Thank you.